and I'm currently the head of partnerships, ecosystems, and strategic alliances at Diamond Trust Bank. And today I'm here talking about banking as a service, which I was happy to talk about because it's basically my bread and butter, literally. And it's something that I do on a day-to-day basis. And it was interesting when I saw the topic, and it was, is it an opportunity for banks? And immediately I joked with one of my colleagues that if it's not an opportunity for the bank, then we are out of a job, right? So to start us off, I'd just like to mention an article that came up sometime in 2016. So Samsung launched a fridge that basically can look at your stock inside the fridge and make an order for for whatever it is that is running low. That was in 2016. Promptly, and they actually partnered with a grocery store in the US that basically once they realize that something is down, they can basically order for food from them. And in 2017, MasterCard plugged in such that you can now, other than ordering and paying at the point of delivery, you can actually order, and then a checkout page was actually created on the screen of the fridge. I don't know if any of you have ever read about that article. And immediately after that, Amazon was going to launch another one, and a lot of technology has come up that has forced people to actually rethink financial services. Because financial services for many years has been what most of us, at least the ones in my age group, would understand would be at the end of the month going with your parents to the bank to get their salary so that you can get, lunch, fries and, stuff. And that was banking then. But over the years, that has changed. And that has changed not because of anything else, but because the consumer has changed. So if you're asking me whether there is an opportunity for banks, for banking as a service, then my simple answer is yes. And the reason for that is because over and over, it's becoming clear that consumers are consuming banking services without the need of a bank, okay? So we have consumers today borrowing without ever stepping into a bank to take their statements and stuff and everything that we request you to do. We have consumers today saving money and buying investments and actually doing a lot of things that was cliche, that was a cliche activity for the banks outside the bank. And it is predicted that in 2030, you'll have over 2 billion people who will be consuming services on a day-to-day basis without necessarily ever stepping into a bank. And we've seen that. We have people in the rural areas today in Kenya that don't have a bank account, but they do actually use banking services, financial services, let's call them that. And the simple question that everyone asks is, does that then mean that it's the end of the road for banks? But that's not true, because then for every problem, if you're looking at it as a problem, there is an opportunity. And when you think about the consumer today, who's driving everything? When you talk about fintech, when you talk about insurtech, invest-tech, all these tech companies that have come up with solutions, bank techs actually, everyone is doing something because the consumer needs it. And they're doing it in the way that the consumer wants it. So the consumer has changed. The consumer is more informed. The consumer doesn't care anymore where they're going to get a financial service, okay? If you today want to buy a fridge and you need to pay, it's 100,000 and you don't have that money, right? And there is someone who's telling you, I can give you that money for you to buy and then you pay me later, right? You will not start asking them, are you DTB? Are you a bank? Let me see your license. The first thing you'll want to do is leverage off that particular solution and then see what it is that you can do with them later or more, right? So the consumer has changed. The consumer is no longer the person who needs to walk to a bank to present papers and get a loan, or who needs to find out what financial markets are happening by, following Bloomberg and what have you. The consumer is sitting pretty in their office or in their homes with a gadget that is giving them all the information they need to make decisions around what they need from financial services. So times have changed. We are not where we used to be. And is it Accenture, did a research, I think I've put something there, where they were looking at youth between 21 to 30, and one of the questions they asked was, would you rather have a gadget or lose your sense of smell? 53% said they'd rather not have a sense of smell, but keep their phones, right? So that tells you how important that, where technology is taking us, how important it is for our consumer to actually be able to quickly be able to consume of your services without necessarily having to follow you where you are. What this means basically is that the consumer is now utilizing financial services at the point of their need. They are no longer utilizing banking services as you would think. You now can go to an auto care, buy a car, get a loan at that point, and start paying off at that point without ever having to step into any financial institution, which then means that the bank has to change. So banking as a service, that was introduction. So banking as a service. Banking as a service is basically the ability of banks to package their products for someone else to be able to distribute so that that person can be able to leverage their specialization, their ability to understand the consumer beta at that particular time, and their ability to distribute that service easily and with a lot of, vigor. That banks, I'm not saying we can't do, but, takes us a lot of energy to do. Banking as a service also means you're basically, as a bank, you're moving away from saying, I'm creating products, I'm creating services, but you're moving to creating experiences, right? Banking as a service also means that you give away your need for control at the consumer level and get satisfied with the control at the point of, giving out, at the point of fulfilling the service. So it stops being about coming to the branch and getting served and knowing that customer at that particular time, but moving quickly towards ensuring that the customer is served at whatever point that they're happy. And so the question about whether or not this is an opportunity to the bank, I tried to just condense it into 3 very interesting ways to look at it. So the opportunity is definitely there. And the biggest opportunity that we all are experiencing, people who already have started looking at banking as a service, is the fact that now you are reducing your operational cost. You don't have to have 200 branches to actually give out a service. You don't, right? You don't have to have, you don't need to analyze everyone's data for you to be able to collect everyone's data for you to be able to analyze it. Someone else is doing it for you so that you can be able to analyze and give that give the service back. And that is a very key thing. One of the biggest costs, one of the biggest impacts that our balance sheets and our profit lines, if you are looking, in March we were releasing our reports, if you looked, one of our biggest impacts to our bottom line is operational costs, right? If you can reduce it even by 10%, you're definitely increasing your income. The other thing is that now you have a wider customer reach. I mean, who would have thought that someone in the middle of Turkana would be able to use banking services? So you ask me what bank is there. CBA is there, KCB is there, right? But they're not really there. Safaricom is there. And consumers there are utilizing Fuliza, they're utilizing Mshwari, right? So you don't have to think about how will I reach that customer who is in a place X that I personally cannot be able to justify why I need to put in a presence, because someone else is actually going to do it for you as long as you're giving them the services they need to offer that person a solution, right? And then finally, diversified revenue streams. Now banks can actually earn from services they don't necessarily have to offer, okay? DTB is not a data bank, okay? But if I was to give banking as a service to a data company today, I can be able to earn from data services, right? And that is not something that if today I decided I was going to do a product that basically offers any kind of data analysis to the customer directly, I don't even think my regulator is going to accept me to do that, right? But now I can be able to diversify my revenue streams. I can be able to increase my revenue streams. I can be able to actually reach customers that I couldn't reach. And because of that, then I'm earning from a customer base, a revenue base that I didn't have, okay? And for us, like everyone else in this room, that is the most exciting thing. I mean, we are all here because of money. So I personally feel that banking as a service today, whenever everyone is thinking about banking as a service, we miss the biggest bit about banking as a service, which is financial inclusion. And financial inclusion basically is the one buzzword, the two buzzwords everyone has been singing since Vision 2030, right? And we have all looked at different ways. I mean, everyone, whenever they're talking to you, they tell you, we are launching this product because we want to, play in the financial, inclusion. We want to include more people, and we want to distribute more financial services. But how are we doing it, and how are we helping the customers when we do financial inclusion? When we do banking as a service, we're including the customer because, first of all, banking as a service means you're selling your services at wholesale. So the same loan that you would have taken directly from the bank at 13%, someone is going to give it to you at 2% because they've elongated the time that they can give you that loan. And that means most customers are able to access those services at points where they naturally would not be given those services. So you're reducing costs, you're increasing access of financial services in different places, different times. Financial services are now 24/7. I remember 3 years ago, in 2020, M-Shwari went down. I don't know if you guys remember. M-Shwari went down for a whole day. And you won't believe it, but the entire country, by that I mean the governors of CBK, the CEOs of the people who are involved around that particular product, had to sit in a room to solve it because people needed to pay things at night. It was on Friday. So the economy was actually being shaken, right? And that wouldn't have happened. And it's M-Shwari. I'm not talking even about M-Pesa. I'm talking about M-Shwari. So people actually do borrow in the middle of the night. Now, 25 years ago, before all these products came into place, if you are stuck at midnight and you don't have a credit card, you just have to wait till the next morning when you go to your nearest bank. So one of the things the most important thing is banks cannot ignore. We cannot ignore banking as a service. We cannot ignore where we are going with technology. We cannot ignore everything that is happening around technology. And it's an adapt or die. They're saying that over 61% of banks that are present today are likely to close shop in the next 30 years. And that is because of the law of adaptation. People who then decide we will not go that route may cease to be relevant in 30 years' time. And because of that, DTB decided we don't want to die. We want to stay relevant. And that's when, we came up with Astra. So Astra is our banking as a service proposition, and it is basically aimed at ensuring that we can distribute banking services at the lowest cost possible, easily, and through the easiest way technologically. So definitely, when we look at banking as a service, as a product, it's an API-driven product. It is not a form or a platform. It's basically an API-driven product. And this is basically, this is basically how Astra basically is positioned from an diagrammatic, let's not say architectural, because I can see CIOs who are going to follow me and tell me don't use the word carelessly, but let's say diagrammatically, working. So we have third parties that offer services through mobile, through web, through agents, through whatever platform that they're offering. And we have quite a number of them who would come to us and tell us, we want to be able to do this, but first, we don't even understand what laws affect us. We don't even understand why you're telling us that I cannot hold value, right? In fact, one of the most interesting things is a few of them telling you, I have a payment gateway license. Why are you telling me I can't hold value? And then you have to dish out the e-money regulation that clearly stipulates that they can't. You understand? And one of the things that we do on a day-to-day basis is the advisory bit, which everyone forgets to look into, because it's one thing for you to come and tell me you want to do an RTGS easily on your platform, and I give you an API, but it is another thing for me to tell you how best that RTGS can work, how it affects you legally and from a compliance perspective. So one of the things that we do is we work with our customers to provide all these services. We have card as a service, payment as a service, KYC as a service. Most of the fintechs, and some of them seated here, don't know that checking IPRS is one thing, but half of the people that will get a good hit on IPRS, like they're positively good to be offered, because IPRS just checks if this person is, registered with the registrar of persons. There is the other bit. Is this person a robber? Is this person a terrorist? Will this person be one of the people who will try to beat your system? Is it Steve who was saying that from Kevin Mutiso, who was saying that most of the customers that actually are on lending apps are trying to beat the system. They take from one, don't pay back, take from another, don't pay back, and the list goes like that. So you don't know who you're dealing with, and until when you start talking to a bank that tells you exactly what that looks like from an impact perspective, that you actually give it the attention it needs. So we offer things like KYC as a service. We work with you from a compliance. We call it compliance as a service, but it's one of the free services that we give, because we take you through what it is that your business is, and how it is affected from a financial regulatory standpoint. We cannot talk about any other legal aspects. We are not experts there, but we can take you through the different, regulatory aspects that actually affect you. How a digital lender is affected, and how a money transfer operator and a normal fintech, a payment gateway, an e-money issuer. Those are 5 different spectrums from a legal perspective. So we work with you to just understand that, and we make sure that whatever it is that you're consuming as a service from the bank is actually legal for you to offer it in the way that you're offering it. And we have other things like investment. Whatever it is that we offer today, we will give it to you if you have a customer base that wants it. And we have, people that have successfully been able to use those services. We have fintechs that have been able to issue cards off of our platforms to be able to serve their customers. We've had people who are able to issue loans, especially around the time when the regulator cut down on digital lenders, and we worked together to just be able to issue loans with these people to their customers within a regulatory framework. We have people who are able to do remittances in and out of the country through the same platform. And our motto is very simple. The impossible, we do today. Miracles take a bit longer. So we work with you. We don't assume that everything is easy. We know that some things are going to be termed impossible, but we take it a step at a time. Ladies and gentlemen, that is banking as a service. Thank you.